request the chairman of Ernakulam branch of SARC of ICAI, CA Ranjit Warrior, to kindly welcome the guests as well as our speaker for the day. Over to you, Chairman.
Very good afternoon to all of you, and welcoming you once again to the internal audit webinar series, and probably the day 2, where CA Deepak Korah is going to enlighten all of us on the digital aspects pertaining to, or the internal audit aspects pertaining to digital transactions and e-commerce companies. As all of us know, for the given point of time where all of us are very used to or so dependent on the technology front or the e-commerce websites and e-commerce transactions. So is it that our duty is got a major thrust of late with the e-commerce companies and the audit of e-commerce corporates, where the impact of taxation of it is not just a very simple process, and that's how Deepak rightly coined the topic for the day, that it is not just a click away. The impact of TDS as an income tax and GST, the digital tax impact is probably not a small joke that as the auditors that we might have to foresee. And also because there's more and more of the technology advent, more so for the e-commerce aspects, where that you probably might have seen a display advertisement, I think of Zomato or Swiggy, I'm not sure, which clearly on a full page ad, which clearly says at the end that and you thought that we are just delivering food. So the increase in the abundant increase and dependence of activities of these kinds of aggregators on the digital front is also putting us on a lot of pressure, if I should say, or the responsibility as auditors is also increasing in a very war footing manner. And so it is that Deepak Korah, the son of legendary, or a very dear senior of all of us, George Korah sir, has as a debutant here has joined us today for a very interesting session. He has already taken a session on GST, a study circle on GST earlier, and with his rich experience and knowledge, what he's gained from his articleship days, also with Santanakrishnan sir, one of the senior most firms in Chennai, I'm sure he'll be able to throw a lot of light and enrich all of us on this particular topic. With these words, let me wholeheartedly welcome Deepak Korah to the great session today.
Thank you.
As like how I said about the digital front, as all of us know, of late there is also when education is also turning into a digital system, there is a lot of digital divide. That is the coin, that is the terminology used, especially now. There's a lot of there is a CSR requirement. There's a lot of requests that is coming into the branch with regard to requests with mobile phones or tablets, be it used tablets, be it used mobile phones, a decent quality ones. That Ernakulam branch has been getting a lot of requests from the government schools, that we would like to take it up, and given to know that as genuine students that who are not in a position to afford the digital equipment for their classes at school level. And it is my urge and humble request to all our respective members that if we could all join together and aggregate a few of it. I think Roy sir, the request that Roy sir has got is at least 50 numbers of tablets or mobile phones that is requested from various places in Varapura, Chellanam, and all the outskirt areas where there is access of which is a little question mark. And I'm also happy and glad that Roy sir is taking a huge initiative in this front. And I also humbly request our members to kindly support and be part together in whatever form and in whatever manner possible. Even if you have a phone to spare, a tablet, to an old tablet of yours or your child's to spare, will be nothing like it. Probably we could be a holding hand to a student or to a younger generation kid who would look forward to a great future. So all the very best, and welcoming each one of you to the day 2 once again. Let's all have a great learning today, and of course a very innovative topic, and all of us look forward to listening to you, Deepak. So with these words, let me hand it back to Deepak Varghese. Jai Hind, Jai ICAI.
Thank you, Chairman. It's a pleasure to introduce a speaker for the day, CA Deepak Korah George. CA Deepak is currently associated with Messrs. Korah and Korah Chartered Accountants, a firm based out of Kochi, and is working there as Manager Taxation. After completing his schooling from Ernakulam, he went on to pursue his BCom honours from St. Saviour's College, Calcutta. Subsequently, he joined for articleship with PKF Sridhar and Sandanam LLP, Chennai, from where he gained expertise in taxation and internal audits. After qualifying his finals in 2019, he took up the role as Manager Taxation at Korah & Korah Chartered Accountants. CA Deepak developed a flair for public speaking during his college days, and he took this to his advantage when he got the opportunity to present papers at 5 national and 1 international conference for CA students. Post-qualification, he was invited to present technical topics at various Rotary Club meetings and have also contributed articles on GST. Recently, he took a session on GST refunds, a study circle meet for Ernakulam ICAI. He is also a YouTube channel, very interesting, called Connecting Minds, which is used to explain tax concepts in the most lucid manner through short videos. With these words, may I request CA Deepak Korah to kindly take over the dais.
Thank you all. And earlier, CA members of the institute. Today, I will be taking a session, pretty long session for 3 hours on digital tax, not just a click away. Earlier, it was very simple to understand. By just a click, you could get your things done. Still, you can get your things done, but the person providing you services for him or her yes. I hope you're able to see the PDF.
Not yet.
Okay.
I think there's a net issue, Deepak. Maybe if you could switch off the video if required.
Yeah.
And then if it helps, I'm not sure. Yes.
Can you see my screen?
Yes.
This one?
No.
Right now,
No.
it's dark. Can't see anything right now.
Okay, this one. Let's get this initially fixed. So I'll switch off my video for some time so that the internet is stabilized. So can I get a confirmation? Can you see the
Sure.
PDF?
Yes,
Yes.
we can see the presentation.
Right.
We can hear you loud and clear.
Thank you. Fine. So as I said, digital tax is a new concept from 2018 to 2020, and even till this May 2021, this topic has gained a lot of interest, right? So in today's seminar, I'll be touching upon some important concepts under the ambit of digital tax. So this is how I've structured my session. Initially, I will talk about the digital economy and what are the challenges that still countries like India and many other top countries still face. Then I will move on to the famous equalization levy. You have EL 1.0 from 2018 and you have EL 2.0 from 2020. Then we will look into TDS provisions, the famous 194.0, which created a lot of hue and cry when it was brought in the Finance Act 2020. Then we look into GST provisions. It's not an amendment. It was there right from 2017-18, wherein you have concepts of Section 9(5) talking about, e-commerce reverse charge, you have Section 52 and OIDARS. Then we will look into significant economic presence, which again was brought out in 2018, and there has been an amendment in 2020 as well. And as we talk today, what is the burning issue? That is today's scenario, right? So first we will look into the digital economy. Okay. What is the digital economy? It has two meanings. It is not a Wikipedia definition that's not defined anywhere, but it is explained in many areas. It is nothing but the economy that is based on digital computing technologies or conducting businesses through digital markets based on internet as well as WWW, World Wide Web. In other words, it is hyper connectivity between people, organizations, and of course, machines. So digital transactions, there has been a deviation from the need of physical cash. Gone are those days when you have a lot of money in your wallet. It is sort of deviated from the manner of doing things traditionally to the manner of doing things using more technology. But in simple words, deviation from brick and mortar to cash and carry model. The main villain, the main hero in this particular scenario is the internet, which is largely responsible for this transformation. I would like to bring out at the front certain statistics. Well, there's no need to compare with US because we are way above US in terms of digital usage. But then we compare with China and we see, right? So this is basically a comparison initially pre-COVID and post-COVID. As all of you know, post-COVID, the use of digital technologies have increased. Now, 45, almost 50% of the population are active internet users, 624 million. 2 years back, or probably 1 year back, it was 577 million. That is around 37% of the population. Social media users have increased tremendously from 11.1% to 32.3%. So there has been a tremendous increase, one, in internet users. Almost half of the population of the country, India, are users of the internet. And social media users there's a huge rise from 11.1 to 32.3%. But again, we are still behind China, even before COVID and even after COVID. The Chinese figures are quite, shocking, and therefore I'm not putting it here. Let's be happy with the Indian figures for now. So yes, as I said earlier, there's been a drastic change due to COVID-19. Social media websites, as you understand from the figures, have the number of social media websites have increased. The number of users have tremendously increased, and therefore target advertising, which is the terminology for a particular service is called target advertising, that has tremendously gone up. It is when these social media websites, they use the data from you in terms, of your browsing. You go to different websites, you post pictures, videos. They do some sort of data analytics, and then they sell the data to some, MNCs, and that is how the MNCs put out their ads, which reaches your phones, and that's called target advertising. Work from home has probably been, successful because of computing power. All of us can easily get up from our beds and, switch to the work mode within a span of 5-10 minutes. And that's all possible because of computing power. So in the last 1 year, there has been an absence physically, but physically, FISCALLY, physically, it's much present. And that too, in the last 1 year, the government of India has brought out new laws, new rules and regulations, which impose more tax on digital transactions. Another astonishing statistic is that at every 1 second, 127 new devices are getting connected. So every second, as we move, 127 new devices are getting logged on, as in they're getting logged on to the internet. So yes, what are the challenges? Well, still it's quite difficult to establish a nexus between the person, receiving the income and the ultimate parent company. That is, the servers may be located somewhere outside the country. The income may be received in someone's hands. The service may be received in someone's hands. So still, yes, the government has tried its best to bridge the gap, but the challenge that still exists is a lack of nexus between the income recipient and the ultimate parent company. Or I would say the recipient of that service and the ultimate parent company. Quantum of income is another problem. You had, in fact, in 2018, the significant economic presence concept came in, wherein they had only prescribed, as in the section said, the new explanation for significant economic presence said that it is, if you exceed the prescribed limits, then we will tax you. Those limits for 2 years, it was not prescribed. So quantum of income is very difficult. It's very difficult to categorize income into different heads when you look at online transaction and to determine the quantum of income, right? If you are putting out a review on Amazon.in, the next customer who's coming and purchasing that will is that based on the latest review that you have given. The review that you have given is a value in terms, it's a non-monetary value. But how do you compute? How do you quantify that income or that value is a question, and that is a major challenge for digital economy. So yes, we have crossed digital economy and challenges. To put in some words, it is the transformation from traditional brick and mortar to technologies, to digital technologies, and that has changed the way the world has worked in the last 2-3 years. We have touched upon the two challenges, as one is lack of nexus and second is the quantum of income. And next, what we'll do is we will look into something as equalization levy. Now, equalization levy was a new concept brought out by the Finance Act 2018. But I would like to go to the source of this levy. Many would still get confused between is equalization levy part of income tax? No, it's not. If you want to search a particular section of income tax website, equalization levy is basically 167, 165 of the Income Tax Act, 165 Finance Act 2016. Now, the corresponding section is not available in Income Tax. If you go to 165 of the Income Tax Act, it deals with trust income. So equalization levy is not a section inside Income Tax Act. It's a levy, a different kind of an act altogether. So therefore, if you go to equalization levy, there are around 15 sections, right from 163 to 165. There are about 17 sections, 163 to 180, that talks about equalization levy. It's a different levy altogether. So what is the source? G20 Forum, Global 2020, that is 20 countries that put out an advisory to OECD, Organization for Economic Cooperation and Development, to tax MNCs who have been enjoying tax exemptions in tax havens. So the G20 forums, G20 forum, they in fact put out their recommendations to OECD, and OECD within a couple of years brought in 15 action plans for BEPS or base erosion. To prevent MNCs, base erosion profit shifting actually brings into net MNCs so that it can be taxed. So out of 15 action plans for BEPS, action plan number 1 was tax challenges arising from digitization. This actually, if you go to the OECD website, you will find those 15 action plans. And you have, among the 15, you have one for transfer pricing, you have one for country by country reporting. It's quite interesting to read if you want to know more about international taxation. you can refer to those 15 action plans, which is in the OECD website, and that's for BEPS. But our focus today is action plan number 1, and that is tax challenges arising from digitization. So in action 1, it was said that there should be some kind of levy, some kind of tax, wherein the countries would impose the same on online services and online transactions. And because of that, India, through the Finance Act 2016, brought out equalization levy at 6% on payments for non-residents, payments to non-residents for specified online services. We'll of course look what specified online services is, but it brought about an equalization levy wherein the non-resident MNCs or any kind of non-residents have to pay equalization levy to the Indian government for their provision of specified online services. And that's called EL 1.0. For 2020, through the Finance Act of 2020, that's the last budget, the last Finance Act, EL 2.0 was introduced, wherein payments to non-e-commerce operators, the income that they non-resident e-commerce operators of goods or services, from the income that they receive, they are liable to pay equalization levy of 2%. So do not get confused between 1.0 and 2.0. It is not a replacement. It is two different levies. Levy called equalization levy. There are two rates. 2% is basically relating to payments for e-commerce goods and services, and 6% is basically for specified online services. And recently, Finance Act 2021, there has been certain clarification to sort of do away with the confusions with EL 1.0 and 2.0. So first, we will look into EL 1.0. Well, this was effective from the 1st of July 2016, and it was a separate levy altogether. And it was brought about because of the OECD recommendations of the OECD Action Plan 1 for BEPS. The rate of levy is 6%. It charges specified services. That is basically online advertisements, digital advertising space, that is provision of digital advertising space. On the amount of consideration received or receivable by a non-resident from who? A, you have a or a non-resident having a permanent establishment in India. Permanent establishment in this case basically means a physical presence. So 6% is levied on consideration received or receivable non-resident from a resident having a business income in India or another non-resident having a permanent establishment in India for the provision of online advertisement services or digital advertising space services, etc. There was a rule attached to this. If it does not exceed that, then it is not chargeable. The payer or the customer getting the service, that is the non-resident having a permanent establishment in India, and if that specific services is connected to the PE, that is, I have a PE in India, and whatever services that I'm availing from another non-resident who's liable to pay equalization levy. Now, if those services are connected to my PE, then there's no need for levy of 6%, and the payment is not. There are 3 exceptions, I would say, where there's no need to charge equalization levy. One is the threshold limit of 1 lakh. If it does not cross 1 lakh, there is no need for 6% levy. Transaction of the person paying or the person availing which is making is a non-resident having a PE in India, and where the specified services, that is online ads or digital ad space, is connected to that PE in India, then the levy on in the hands of the other non-resident getting that particular consideration is not applicable. The payment is not for businesses. That's basically if it's for personal purposes, then levy is not there. So to put in simple words, 6% of equalization levy is applicable on consideration received or receivable by a non-resident for providing online advertising, digital advertising space from a resident having a business in India or from a non-resident having a permanent establishment in India. If it is for personal use, there is no levy. If it is in the case of payment by a non-resident having a PE in India where the services is the PE, there is no levy. And if the aggregate value is to levy 6%. 2.0 further broadens the scope of equalization levy with effect from the 1st April 2020. That is basically Financial Act of 2020. 2% of equalization levy was brought in, but the nature was different. It is not for receipt for providing advertising space or digital space for putting ads. No, it is basically for the consideration received or receivable by an e-commerce operator from the e-commerce supply of goods. Supply of services to who? To a resident, to any person, be it a resident or non-resident, who uses the IP address to order in India, or a non-resident under specified circumstances. So, on the value, on the gross value of consideration received or received by e-commerce operator for supply of e-commerce supply of goods or services to a resident, 2, a person using the IP address in India, and 3, to a non-resident under specified circumstances. Now, what is that specified circumstances? It basically means sale of ads or sale of data targeting Indians or a person using Indian address. For example, Apple is a non-resident. Apple is putting up ads targeting Indian customers on, say, Alibaba, for example, which is a non-resident e-commerce operator. In that case, the consideration received by Alibaba for the supply of goods or services is subject to equalization levy of 2%. So this is a case where they're non-resident, but it should relate to sale of ads or sale of data targeting Indians or using the IPs from India. Again, there's a threshold limit. If aggregate value, the gross value consideration is below 2 crores, no less. EL 1.1, it was what, 1 lakh? 2 crores. Now, to the same exception in EL 1.2, that is NR having a P in India and the specified services are connected to the P. That is, for example, if Apple has a permanent in India and the services that Apple has availed by listing its products on Alibaba is connected to the PE of Apple in India, there is no levy for Alibaba. And if it is already levied under EL 1.0. So the almost the same exceptions as EL 1.0, but EL 2.0 is basically for e-commerce operators, wherein 2% would be levied on the gross consideration received or receivable by. It is basically a non-resident e-commerce operator for the e-commerce goods or services to a resident or to any person using the IP address in India, or to ads or data on the platform of the e-commerce operator in. And exception has not exceeding 2 crores. There is no levy of 2%. Having a P in India and services connected to P, there is no levy of 2%. And if already levied under EL 1.2, you cannot further levy EL2. EL 1.2. Now, it will be preferred whether under both EL 1.2 and EL 2.2, EL 1.2 would take precedence. because EL 1.4 is defined under section 165 of the levy, whereas 2.0 is under 165A. So which section is first? 165, which means EL 1.0 will take place. Now, before we do some case study examples, I would like to cover some more points relating to equalization levy. As I said before, 2021 Finance Act has brought out certain clarifications, which probably has done away with a lot of confusions or probably expanded the scope also. Finance Act 2021 says that EL 1.0 as well as EL 2.0 does not include consideration as royalty or fees for technical services, which basically means that if that particular income is taxable under 115A of the Tax Act, the royalty of, so then the 6% or 2%. The next part is has widened the scope of services, basically acceptance of offer for sale, placing of PO. That means it is not just sale of goods or products, but accept an offer for sale or place a purchase order. Still, I would consider it to be a part of online sale of goods or services, and then I will bring it under the ambit of equalization levy. E-commerce is exempt. Actually, under section 10, subsection 5, both EL 1.0 and EL 2.0 has been, the income has been exempted. So Alibaba being a non-resident e-commerce operator, the income that Alibaba receives on which it pays equalization levy is exempt. There's no because section 10 subsection 5 says that from 1st April 2020, any consideration received with respect to this equalization levy is not chargeable to Income Tax Act. Of course, you have to pay levy at 2% or 6%, but it is not, the income received by the operator is not chargeable to tax. Well, 48 basically if you do not deduct TDS, or if you deduct not pay TDS within the return filing due date, then that expenditure will be disallowed. Well, same thing applies for equalization levy also. That is, by present e-commerce operator, the levy has not.
I think there's a technical glitch from his end.
Speak, Chairman, can you hear me?
Yes, quite clear now.
Okay, fine. So I'll just continue. Like I said,
Yes.
there was the provisions relating to payment, interest, and penalty. The due date for payment is 7th of the next month, just like your TDS. Interest is again like TDS, 1% per month, part of the month. If you have not deducted equalization levy and paid from that date till the date of payment, interest will be applicable. Penalty provisions, again, if you have not remitted to the exchequer of the Indian government, then penalty equal to the amount of equalization levy will become applicable. Those were small provisions relating to equalization levy given in sections 166 till around 180, talking about payment, interest, penalty, and some appeals and all that. So form 1 is the form for equalization levy, wherein you have to file that particular form within 30th June of the next year. Right. So quickly, let's look at these case studies for you to understand this practically. I did mention this example earlier. Apple Incorporation running phone ads to target Indian users on the Alibaba platform and pays INR 3 crores. Right. This 3 crores is subject to equalization levy because I will just take you to the slides previously. It said on the amount of consideration received or receivable by e-commerce operator from e-commerce supply of services to or non-resident specified under specified circumstances sale of ads. So Apple is putting up its ads on Alibaba being a non-resident e-commerce operator. The income received by Alibaba, that is INR 3 crores, will be subject to equalization levy, and they will have to pay 2% on that amount of consideration received. Number two, Alibaba, let's say, buys the data from Facebook India, which actually happens in reality, for 1 crore and sells this to Apple Incorporation for 6 crores. So Alibaba is buying data from Facebook India for which they are incurring a cost and further selling the same to Apple Incorporation for which they are getting 6 crores. So yes, equalization levy is applicable on 6 crores because it says sale of data targeting a resident or any person using Indian IP address. So in this case, 6 crores is subject to EL of 2%. Third one is Amazon Music providing services to Indian customers. Well, I put no equalization levy here, assuming that the office of Amazon in Hyderabad is a permanent establishment. Amazon Music is a latest app that you can see in Play Store. And the services relating to Amazon Music is also provided by that particular office in Hyderabad, which is assumed to be a permanent establishment. So in this case, the non-resident being Amazon USA has a permanent establishment being Amazon India in Hyderabad. And the services in terms of providing music, albums, etc., is connected to that permanent establishment. So in this case, there is no equalization levy because it falls within one of the exceptions, NR having a PE in India and specified services connected to the PE. That is Amazon US having a PE in India in the name of Amazon India, and the specified service, that is music subscription, is connected to that PE in India. Fourth one, I only placed an order for goods through the platform. Rest all the functions are offline. That is, I've only probably raised a purchase order or given an order, but the remaining functions like payment, delivery, etc. are done offline. In this case, equalization levy is only applicable on that amount of consideration attributable to that online service, right? Because in Finance Act 2021, online sale of goods includes acceptance of offer for sale or placing a purchase order. So if I place a purchase order on one of the platforms, but all the other functions are done offline, whatever is the consideration I've paid, if any, for that order being placed, that consideration is subject to equalization levy. And the last one is also a bit interesting. NR e-commerce, that is a non-resident e-commerce operator, is selling goods to a resident for rupees 100, for example. And the goods are being listed on the platform of this NR e-commerce operator by another person from whom this e-commerce operator gets commission. So there are two streams of income here. On one side, the NR e-commerce operator is selling goods to a resident for which he's getting some money. And on the other side, the person who has listed his goods on the NR e-commerce operator, that's basically a resident who has listed his goods on the e-commerce operator. From him, the e-commerce operator gets a commission. So it is said that equalization levy is applicable on the sum of these two because it says aggregate of consideration received with respect to that transaction. So 100 plus 30, both are clubbed, and on that 2% will be applicable. It's not just 100. whatever, because it says e-commerce supply of goods or services or both. So in this case, it is both, and therefore EL of 2% will be applicable on INR on rupees 130. Well, there are still challenges to equalization levy 1 and 2.0. You can see the figures here in 2020-21. Total revenue collected by the Indian government with respect to EL 1.0 and 1 and 2.0 was around 1,500 crores. When compared to 1920, this was 1,136.5 crores. So there's a huge jump, I would say, mainly because in 1920 there was collections only from EL 1.0, and in 2021 there have been collections from EL 2.0 also. So that's why you have a jump. Earlier it was only 6%. Now you have 6% plus 2%. And most of these e-commerce operators are subject to levy of both EL 1.0 and 2.0, not at the at that correct moment, but then separately they are charged. As in, it may not be on that same particular transaction, but every other transaction they are either subject to 2% or 6%. So you can see the three challenges which are still a challenge for equalization levy. And actually, this is also a challenge for OECD and I stated in the action plan of BEPS. The first challenge is basically that unlike the other taxes in Income Tax Act, you cannot get a credit of equalization levy in the country from where the non-resident is from. It's basically a sunk cost. Because it is not a part of Income Tax Act 1961, credit of EL is not available, which means you cannot set off with the other tax that you're paying in your home country. So there's the issue of double tax here. I don't know how it is practically possible to track the IP address of each customer. Just imagine 1 second, 127 phones. Imagine if those 127 are placing orders. Half of those people will be, Indians outside India or whatever in India. How do you track the IP address? And that's quite difficult. That you have to go to the extent of tracking the IP address of each customer. So therefore, the correct mechanism the operators will only have to follow. Government has not given any procedure on how to track or any guidance on how to track. They'll have to probably build their own analytics, their own software to find out how to track. And we are still doing it now. There's no clarity as to whether the value of goods and services should be grossed up. Whether equalization levy of 2% or 6% should be on rupees 100 or rupees 100 including over taxes. So that you can either show it without grossing up or show it with grossing up. But then there is no clarity or there is no guidance. So here you can has changed the structure of online is where you want to purchase, where you want to purchase food, where you want to purchase air tickets, where you want to make online payments. In fact, India tops the list of digital transactions. If you see the statistics, India has, it is much more than I think 2 times more than China and 3 times more than US in terms of usage of digital transactions. Booking of cabs, and of course, seeing movies. All of this has come within the ambit of taxes, wherein the service provider is liable to the equalization levy. So we finished the digital economy and the challenges, right? And we also passed through equalization levy. This equalization levy is probably an old concept because when compared to TDS, when compared to significant economic presence, it is something that was introduced way back in 2016, and therefore it is quite old when compared to the present provisions of TDS 124. But all the more, you can see the revenue collection. It is steadily increasing. I would say in 21-22 also, the almost doubled because of the COVID year, right? So next we look into TDS provisions. TDS 1940 effect from it is again from the Finance Act of 2020. From October under 194 it is applicable. 194.0. What is the scope of this section? Sale of goods or provision services to the participant is facilitated through any e-facility or any platform for e-commerce operator. That is in general, e-commerce operator, e-commerce participants who compulsorily should be residents. In those, the e-commerce operator may be a resident or not liable to deduct TDS and make the payment to e-commerce. If I'm listing my products on a e-commerce operator, say Alibaba, when the sale is happening with the end customer, and when Alibaba is making the payment to me for that particular sale value, it is 194.0 and then make the remaining, and of course deduct the commission marketing expense. Who again, other versions of TDS, it is at the time of credit or payment to e-commerce participant, whichever was earlier. You had except in some sections in interest. Otherwise, in other sections, it is liable to be deducted either at the time of credit or payment, whichever was earlier. Same thing applies to also. The rate of TDS is quite minimal, but looking at the quantum of transaction is 1%. During of course, from October 2020 to March, like it was reduced for all the other sections of TDS, it was also brought down by 25% to 0.75 of gross amount of services. So it's basically 1% of the gross amount of such sales or services, or both. When this is not, when the e-commerce operator is an individual or HUF, small parties basically, when the gross amount is not exceeding 5 lakhs, and the individual or the HUF has furnished a PAN or to the e-commerce operator. So it is only applicable to an individual or HUF. It is not applicable to a firm, to an LP, to a company, right? The fact that the gross amount is less than 5 lakhs, a firm, company, when they get payments, it is only basically for an individual HUF where gross value is less than 5 lakhs and they have furnished PAN or the e-commerce operator. Some decisions where you can see in reality where you order food through Swiggy and you make the payment directly to Swiggy, being the e-commerce operator. That is, you order food through Swiggy and you make the payment to the delivery partner who comes and delivers food to your location. You make the payment cash directly to him. In that case, the gross amount will include that value also. That is what the e-commerce part is. Right. So
It's gone again.
okay.
Yes, please.
Can you?
We cannot hear anything. No, we couldn't hear in between if you were speaking.
No. Directly made to e-commerce participants would be to be the gross value of the consideration. So if I'm a customer and I'm directly a payment to an e-commerce participant, the payment made to the e-commerce part would be included in the gross value of this consideration. Point number two is that any transaction which is subject to TDS under 194O is not subject to TDS under any other section. For example, if ClearTax online service is making a payment to a chartered accountant or a consultant, 194O will be applicable, right? It is basically 1% made to the accountant, but it will not fall within the technical services or professional services. 194J will not be deducted. So in other words, any transaction which at 194O will not be subject to other provisions of TDS. In this, ClearTax being an online platform of sale of services is providing a payment to an accountant who is provided a service ClearTax. That payment is already subject to 194O. It will not be subject to 194J being a professional service. Again, your 1% will be 5%. Therefore, 206 will amend this effect to 194O, which said that your 1% shall become 5% if PAN is not furnished. And each participant should be a resident. Like I told you, so the person receiving payment should be a resident, e-commerce participant. So the e-commerce operator can be a resident or a non-resident, but the e-commerce participant should be a resident. And 1% is to be deducted on the amount of the services made by the e-commerce participant through the e-commerce operator. Now, this particular to understand what is 194O, and I'll go very slowly on this. Let's take the case of Samsung India Limited. In this case, Samsung India is selling 1,000 TVs at 50,000 rupees each. In other words, it is listing its television sets through Reliance Digital, and is opening up the platform for prospective customers. Customers are buying these TVs and paying 50,000 into 1,000. That's 5 crores is the value that the customers is paying to. In this case, digital, when it makes the payment to Samsung India, it will of course deduct its commission or marketing or courier charges. Let's say in this case, the commission is 10%. So 5 crore was the value of television, and this needs to be paid to Samsung. So you deduct 10% commission, so the resultant amount is 4 crore 50 lakhs. Now the query is 194O on 5 crores or 4 crore 50 lakhs. And if you go back to the section, it says that payment made directly e-commerce participants shall be deemed to be the amount credited or paid by the e-commerce operator. In other words, if I pay 5 crore to Reliance Digital purchasing sets provided by Samsung India, 194O is applicable on the entire value of 5 crore, not on 4 crore 50 lakhs. So when Reliance Digital is making of 4 crore 50 lakhs, it shall also deduct TDS under 194O at 1% on 5 crores. That comes to 5 lakhs. So 4 crore 50 lakhs after commission less 5 lakhs is 4 crore 45 lakhs. And 4 crore 45 lakhs is the amount of the total consideration that Reliance Digital is liable to pay Samsung India, which is a e-commerce participant who is a resident of India. Again, here Reliance Digital would be collecting some commission from Samsung India. For example, in this case, it is 10%. 10% commission is being collected by Reliance Digital from Samsung India Limited. You could also ask, is this commission collected subject to TDS under 194H? Well, the answer is no. Like I said in the previous slide, there is no TDS under any section if the transaction attracts 194O. So once this transaction has attracted 194O, 194H will not be applicable on the commission income received by the e-commerce operator from the e-commerce participant, in this case being Samsung India Limited. So once 194O, it says it's an overriding section, notwithstanding anything contained in any other provisions on Chapter B, which is basically Part B, which is basically TDS. It says that no other TDS section shall become applicable. Therefore, there's no 194H on commission payments. If this was a case of professional services, there would be no 194J as well. Now, let's probably change the e-commerce participant's name to Samsung Japan. Samsung Japan is listing its products through Reliance Digital. Like I said, TDS under 194O is not applicable when the e-commerce participant is a non-resident. He should be a resident. So in this case, it is Samsung Japan. So initially, you would say that no, 194O is not applicable. You can then apply the other provisions of TDS, one being 194H. But again, if you strictly look at it and where to give an opinion, then there is a business connection between Samsung India and Reliance Digital, wherein Reliance Digital is acting like a, it is habitually concluding contracts on behalf of Samsung India Limited on a yearly basis, and therefore of Samsung Japan, and therefore there's a business connection between Samsung Japan and Reliance Digital, and therefore this will be subject to income tax. So initially 194 will not be applicable because the e-commerce participant is a non-resident, but then you have to look at the other provisions of the Income Tax Act and apply business connection explanation, and it will be subject to tax under Section 9. Suppose the e-commerce participant is not Reliance Digital, let's say it's Alibaba. If the e-commerce participant was Alibaba, then 194O will still be applicable, because in this case, the person making the payment need not necessarily be a resident person. It can be a non-resident e-commerce operator as well. So if Alibaba comes into picture, 194O will be applicable, and Alibaba getting the consideration in terms of 5 crores, equalization levy will also be applicable on that, because in this case, Alibaba will have to pay 2 kinds of taxes. One is 194O TDS, and second one is equalization levy at the rate of 2%, because it is a non-resident e-commerce operator. So we finished with the main aspects of equalization levy, the TDS provisions. TDS provision, the most important being 194O, and I've also explained one case study, which would probably, it would have been clear to you when to deduct 194O and when equalization levy also comes into picture, when 194O also comes into picture. Now we will look into GST provisions. Well, in GST, there are basically 3 aspects that I need to discuss. One is the fact that there is a reverse charge that is applicable for the service recipient under Section 9 subsection 5 by the e-commerce operator. The second aspect is OIDARS, Online Information Data Access or Retrieval Services, which is basically, again, connected to digital transactions. I will discuss the taxability and the point of and the place of supply rules for OIDARS providers under Section 14 of the IGST Act. And the third aspect is basically TCS, which is quite important under section 52 of the CGST Act. TCS, that is to be collected by the e-commerce operator before making payments to e-commerce participants. So the first aspect is basically RCM liability under section 9, subsection 5. Now, in this case, GST is to be paid by the e-commerce operators when services are supplied through it on RCM basis. If you take the example of Uber, Airbnb, and our local Kerala service, Joboy, in all these three cases, they are liable to pay RCM under section 9, subsection 5. So therefore, 9 subsection 5 prescribes only 3 activities wherein GST is to be paid by e-commerce operators at the time of supply of services through their platforms. One is transportation of passengers by cabs or motorcycles. In this case, it could include radio cabs as well. You have the example of Ola, you have the example of Uber. So therefore, Uber is liable to pay GST on RCM basis, because in this case, the service recipient is Uber. Services are being supplied through it on RCM basis. So therefore, Uber has the liability to pay GST for transportation of passengers by cabs or motorcycles. In the second case is Airbnb. You have hotels, you have apartments, you have clubs being listed on this platform. And therefore, here in this case, the service recipient is basically Airbnb, because they are receiving the services of the e-commerce participant or basically the suppliers. And therefore, they are liable to pay GST on RCM basis. One rider here is the fact that only if the hotels are registered or unregistered, then RCM will be applicable. If say the hotels are unregistered, then GST is applicable on forward charge only. If the hotels are registered, then GST is applicable on forward charge, where the hotels will have to pay. So only in the case where hotels are unregistered, Airbnb has a liability to pay, or I can say the service recipient, in this case Airbnb, is liable to pay GST under section 9 subsection 5. And the third one is basically you have service providers providing housekeeping, carpenting, services, and this is only applicable again when there's a correction here. It is not hotels, so it is only applicable when housekeeping or carpeting services, the service supplier is basically registered, is unregistered. So if the supplier is registered, then there is no need for RCM GST payment. It is basically on forward charge. It is only in the case of where the suppliers are unregistered, the service recipient, being Joboy or Airbnb in this case, will have to pay GST under 9 subsection 5. In the case of motor cabs and cycles, there is no condition of registration or non-registration. Irrespective of the fact where the supplier registered or non-registered under section 24, still Uber will have to pay tax, or still the cab aggregator would have to pay tax on reverse charge basis. Right. The next one is basically the tax collected at source under section 52. I forgot to take one more point here, that is RCM liability. If the e-commerce operator is a non-resident, then you should see the physical presence or the person appointed by the non-resident. That is, in section 9 subsection 5, it is irrelevant if the e-commerce operator, being Uber or Airbnb in this case, is a resident or a non-resident. If you're a resident, then good, you can easily tax the person. If you're non-resident, then you're supposed to have a physical presence in India from where tax presence. Then for the purpose of paying GST, you need to appoint a person or representative in India and then pay GST. So in this case, the person paying the GST, that is the e-commerce operator, or you can say the service aggregator in this case, can be a resident or a non-resident. Now, let's understand TCS under section 52. Well, this chart will help you to understand TCS much better without dealing with the provisions upfront. Let's take the case of a platform or a service provider providing online classes. Now you have a lot of these online platforms selling pen drive classes, CA Final, CS Final classes online. And in fact, this has grown over the last 1-2 years because of increase because everyone's working from home and everyone's seeing classes from home. And therefore, the listings in these websites have increased. Earlier, it used to be manual classes. Now it is online classes in virtual mode, wherein you will have to basically, you can easily buy a pen drive or get your access to a Google link to Google Drive and then view the classes there, right? So this is an example of a particular transaction attracting TCS under section 52. You have ABC classes. It may be an institution, it may be a concern providing CA final classes. And these classes have listed the lectures in pen drive mode on a platform called Buy Test Series. Now, Buy Test Series is basically a platform wherein you can easily go and buy these lectures. So these institutions or these classes, in this case ABC classes, have listed their classes in pen drive mode on Buy Test Series. Now, Buy Test Series opens its platform to prospective students who want to purchase the courses. Therefore, they will sell the pen drives or the Google link or the Google Drive links to these students. And let's say for all the classes that ABC classes provide, the payment made by the students is rupees 1 lakh. So 1 lakh is basically made by is paid by students through the payment gateway of Buy Test Series. And this is basically for the entire pen drives given by the entire value of pen drives given by ABC classes. Now, TCS under section 52, the liability is basically on Buy Test Series to collect the TCS and pay the same to the government. So what it does is, when it collects 1 lakh from students, it is liable to pay certain portion or probably a majority of the portion to the e-commerce participant, in this case ABC classes. It is liable to pay maybe 1 lakh less its marketing cost or whatever. But let's say in this case, it is liable to pay the consideration of 1 lakh received or collected from the students for purchasing the courses. So Buy Test Series, what it is supposed to do is, it is supposed to pay a consideration of 1 lakh to ABC classes after deducting TCS at 1%. Earlier, it was the maximum rate of TCS given in this section is 2%, but as of now, as we speak, it is only 1%. 0.5 plus 0.5 is the rate of TCS that is to be deducted on the gross value of consideration, the payment of consideration of 1 lakh. So in this case, Buy Test Series is charging TCS at 1 lakh at 1%, sorry, and the remaining amount is given to ABC classes. And what does it do with this 1%? Buy Test Series with this TCS, it has to pay to the government within a particular due date. It is basically 10th of the next month. And like your GSTR 3B that you file for normal taxpayers, By test series is also liable to file something called as GSTR 8, showing the value that it received from the end customer and the TCS that it collected. So earlier, TCS under Section 52 was not there. That is, prior to GST, there was no concept of TCS under Section 52. That is, there was no concept of TCS in indirect taxes. Don't confuse this with direct tax. It is not direct tax. It is TCS under Section 52 of the CGST Act 2017. So before this TCS concept came into being, ABC classes were showing some income to the income tax, to the GST department or to the service tax department. By test series was showing some income to the department. So TCS under Section 52 sort of bridged that gap. And what it says is that the e-commerce operator in this case, collecting the tax should file GSTR 8. And in GSTR 8, you should show the value that you collected from the customers. Right. And that will be matched with the value of the payment received by ABC classes, less whatever marketing, courier charges, etc. Now, the question could be that ABC classes, it has lost this 1% of TCS. Will it get credit? Yes, it will get credit, like how it is right now for GSTR 1 and GSTR 3B. The moment you file your outward supply return, in this case GSTR 8, the amount of TCS will appear in your GSTR 2A of the person providing classes, in this case ABC classes. So yes, you will get credit, like how TDS under GST is, you will get credit of TCS collected under Section 52. And this credit can be used by ABC classes for paying off their normal liability. It will first come into the TCS section in the GST portal. You'll have to click on accept, and then it will go into your cash ledger. From your cash ledger, you can utilize you can either claim refund if you're not having any tax to pay, or else you can set off that balance appearing in your cash ledger with your future taxes in the form of GST. So some points relating to TCS. Well, it's quite important to know that the e-commerce operator should not be an agent. He should receive money, or he should collect the money from the end customer. It is this TCS under Section 52 is not applicable when you, being an e-commerce participant, or the ABC classes in this case, is directly getting payment from the students. No. It should be routed through the e-commerce operator, in this case by test series. If students are directly paying to ABC classes, then e-commerce operator is not liable to collect TCS. It is only a case when the e-commerce operator collects consideration and pays a majority of portion from that consideration collected to the e-commerce participant. So he should not be a pure agent in this case. Another important concept is that TCS shall be of the net value of taxable supplies. Well, what is net value? If you read the provisions of Section 52, it says net value is the aggregate value of the consideration collected through supplies effected through by test series. That is, ABC classes has provided a total value of 1 lakh, listing its pen drives on by test series. So the aggregate value of the pen drives sold through by test series, being e-commerce operator of ABC classes, is rupees 1 lakh. So that is the gross. Minus, suppose there could be, there are many situations wherein you buy a pen drive lecture and it doesn't work and you want to return it. In fact, nowadays, the exchange, because of the return policy for mobile phones, you keep returning mobile phones. Of course, now you have to get something called as defective order, if I'm correct, DO, wherein you will have to go to the particular hardware shop or the shop selling the mobile phone and get a defective order in writing, upload that defective order to the e-commerce portal or call the customer care and give that number, then only will the person come and take the mobile phone. So they've made return policy quite stringent. One of my friends were returning a phone, but he couldn't. He had to get a DO in writing, and now still the phone is lying with him because it's locked down and he's not able to get out and get the DO. So as far as electronics are concerned, you have to get a DO from your nearby associated store, submit the DO or the DO number, and then replace the phone. So your net value in this case is your gross value 1 lakh less there could be 1 or 2 returns, right? It is not right if they say to levy TCS or to collect 1% on the entire value. There could be some returns. So you have to reduce the returns, and that is how you arrive at net value. So TCS is applicable on the net value. Suppose the returns was, let's say, 20,000, then TCS is applicable on 80,000 rupees only in this case. So TCS shall be on the net value, and that too of taxable supplies. Well, the term taxable supplies here is quite important. Suppose there is only there's only a platform providing the supply is only providing books to the e-commerce for listing in the e-commerce website. Books, as all of you know, is exempt from GST. There is no GST on books. It's an exempt supply. And therefore, if the e-commerce operator is making payment to a supplier only against listing of books from that supplier, then there is no need to collect TCS because it says TCS shall be on the net value of taxable supplies. So only if the supply is taxable, the virtue of Section 7 and other related provisions, can you actually levy TCS. So books in this case is not subject to TCS. And like I told before, the e-commerce operator should get a direct consideration from the end customer. He should not only act as an agent, the consideration should flow from the customer through the e-commerce operator, in this case, BuyTest series, through their online payment platforms, and then go to the ultimate supplier, in this case, the ABC classes. Sale of goods or services from own website. Now, this is quite interesting. In fact, there was a clarification relating to this. ABC classes in this particular case study, if ABC classes are providing classes, as in they're listing pen drives on their own website. If my firm is providing services through my own website and not through ClearTax or any other online service provider, in that case, TCS is not applicable. So if ABC classes is listing out sale of pen drives on its own portal, it could be its own e-commerce portal or its own website. In that case, there is no liability for BuyTest series, or there's no, in fact, there is no concept of TCS in such a case, wherein you are directly selling from your own website or your own portal. It is only when you use the service of the third party, in this case, BuyTest series, TCS under 52 counts. Yes, like your RCM under 9.5, in this case also, BuyTest series could be a resident or a non-resident. It is not mandated that the e-commerce operator should be a resident. If he is a non-resident, suppose you are listing your classes on, let's say, Udemy or an academy. Udemy is a non-resident, an academy is an Indian person, Udemy is a non-resident. In that case, what happens is the non-resident e-commerce operator or the aggregator will have to find we'll have to check there's a physical presence of the non-resident in India for the person to pay, for the person to collect TCS. If not, for the purpose of collecting TCS under Section 52, there's a requirement for Udemy or any other non-resident e-commerce operator in this listing of the pen drives to appoint a person for the purpose of collecting TCS. So same like in 9 subsection 5, where I said that Uber, being a non-resident, will have to find a physical presence. We'll have to find a physical presence in India or appoint a person for the purpose of paying GST under reverse charge under 9.5. Similarly, if the aggregator in this case is a non-resident, he will have to have a physical presence for the purpose of collecting TCS or appoint a person or a representative for collecting TCS under 52. Like I said before, credit is available to the e-commerce participant suppliers if you if the e-commerce operator collecting TCS, he is liable to file GSTR 8 and pay TCS by 10th of the next month. On filing GSTR 8, which is basically outward supply return for e-commerce operators, it will come and hit the portal of the supplier in this case, that is basically ABC classes, because it is from the payment of ABC classes that this particular person has collected TCS or deducted tax from that. So therefore, ABC classes will get the credit in the next month, wherein it will first come into your TCS section in the GST portal. You have to click on accept, and then you can adjust that credit which is lying in your cash ledger against your future GST payments. The next one is the third aspect in GST, and that deals with OIDARS. The full form is quite technical. It says Online Information, Data, Access or Retrieval Services, Section 14 of the IGST Act. It is basically why it is given in the IGST Act is because one of the two persons, supplier or recipient, is outside India. In this case, the supplier is outside India. So online information, data, access or retrieval service is basically those services whose delivery is mediated with the help of information technology, minimal human interference. It is impossible without the help of information technology. There's an automatic supply. Those kind of services are tagged as OIDARS, and there's a separate section for that. What does OIDARS include and what does it exclude? Well, it includes online advertisements, cloud services, e-books, online gaming. It excludes PDFs which you just send across to your colleague by mail, services given by CA lawyer through mail. These all involve human interference. So any service which is 99% transmitted with the help of information technology is OIDARS, to put in simple words. Transfer of movies, supply of goods is not covered under Section 14. So in all these cases, the point of the place of supply is basically the location of the recipient. The place of supply rules is given under Section 13, and I find the place supply rules to be the most complicated, thing in the entire GST Act. Forget about input tax credit. Forget about rules relating to how to calculate credit, etc. POS is the most, I would say, in future also, this is going to be the most litigated topic, because if you cannot determine your POS, you cannot go further. If you want to find out whether you want to take ITC, what is the rate of tax to be calculated, what is the type CGST or SGST or IGST, point of the place of supply given under 12 and 13 of the IGST Act holds big relevance. And in this case, OIDARS services, the POS or the place of supply is basically the location of recipient, the person getting the service. Now, I put deeming provisions within brackets. It basically means that when does a person deemed, when is a person called as deemed recipient? Well, in Section 14, there are, I think, 4 or 5 conditions which state that if one of the two or two of the 4 or 2 of the 6 conditions are satisfied, then you are called a deemed recipient, and the place of supply is basically location of recipient. 1, your IP address in India. 2, when you avail the services, your billing address is in India. 3, when you make the payment for these services, the bank through which you make the payment is in India. So if 2 of the conditions are satisfied, given under Section 14 explanation, then you will be called a deemed recipient, and your location would be the place of supply. Right? It is not the location of the supplier, your location is the place of supply. Now looking to, let's come to a case study in OIDARS. Many of us use commonly Google Drive, but Dropbox is an equally beneficial cloud service provider. In fact, during my yesteryears in articleship, I used Dropbox. Although it's quite complicated initially, it is quite interesting when you get a knack of it. You can easily communicate with your peers. Dropbox, for sure, it is a US-based company, and they are into providing cloud spaces for you to store data. Many of us may subscribe to it. Most of us use Google Drive because it's easy to use, but Dropbox has a lot of added features to it. So let's take the case of Dropbox being a service provider, of course, located in US. If Dropbox is providing cloud-based services to a firm, which is basically doing any sort of business relating to that service they've acquired for cloud, then it says that GST is liable on RCM basis. That is, if the firm is availing data access retrieval services from a non-resident cloud service provider or any sort of non-resident, then under RCM, the firm is liable to pay. It is as good as import of service. As you know, import of service is subject to RCM. So in this case, it is not forward charge. The firm will be liable to pay GST. They will not go behind Dropbox or its associates in India. They will go behind the firm and ask them to pay GST on RCM basis. Suppose the service is being provided by Dropbox to any sort of individuals. Any individual who's not connected with the business of using such services, then GST is liable to pay on forward charge. So there is no RCM clause in this because in this case, it is non-business. Suppose the individual was using it for a business purpose, then yes, if he's registered, he needs to pay GST under RCM basis. But then in this case, most of us, if I'm tomorrow if I want personally a space in Dropbox, I'm using it for not my business because I'm not mentioning my firm's name or my company's name anywhere. So I'm an individual involved in non-business activities and I'm availing the services of Dropbox. In that case, Dropbox is liable to pay GST. Now, how will Dropbox pay GST? It is in US. Yes, it has to have a physical presence for the purpose of paying GST. If it does not have a physical presence, it needs to appoint a representative or a person in India for the purpose of paying GST. Now, they should go behind Dropbox and then tell them to pay GST, which is quite difficult in practical sense. Dropbox providing services to government departments. Again, you have government companies, government departments, all are like what the GST law states is that like individuals for non-business, again, forward charge, Dropbox is liable to pay GST, wherein you have a physical presence or appoint a representative. So to individuals for non-business purposes or to government departments, GST is liable on forward charge basis, and it is liable to be paid by Dropbox. The fourth scenario is when Dropbox is making a payment to, providing services to non-residents. Now, this is quite simple to understand because the service provider, a US-based company called Dropbox, and the service recipient is a non-resident. And therefore, if both the parties are non-resident, there's no question of GST in this case. So it is totally exempted. Now, what happens when let's not take the case of Dropbox. What happens when a non-resident service provider who's not located in taxable territory of India is providing a service to government departments? Forget OIDARS, any sort of service. Again, it is exempt. The GST law states that non-taxable online recipients, that is basically individuals, the second case, and government departments, when they are availing any sort of services from non-residents, then it is totally exempt. I'm not saying that it is exempt for OIDARS because for OIDARS, like I said, it is liable on forward charge basis, wherein Dropbox has to pay. But forget about Dropbox, forget about OIDARS. Any non-resident providing services to individuals. I am taking a service from a non-resident for my personal use. Why would there be GST? Simple to understand. Or a government department availing services from non-residents, specific exemptions given for them. So only in the case of OIDIRS, individuals or non-businesses, government departments, the transaction is taxable, but again, they will not have to pay. The service provider, Dropbox, will have to pay in this case. So we have completed digital economy, the challenges. We have completed equalization levy. We have completed TDS provisions. We have completed GST provisions. And next, we will look into significant economic presence, or SEP. Now, I have tried to summarize the concepts of significant economic presence in two pages, because I feel that unlike the TDS, unlike the GST, unlike equalization levy, this is has lesser importance, because initially when it was brought out in the Finance Act 2018, there were no limits prescribed. And recently, in 2020, in the Finance Act 2020, they have again, the limits were not prescribed, but they have again expanded the scope of the transactions. And recently, just last month, CBDT brought out a circular wherein the limits were fixed. So I would say that at the moment, it is not really important because the rules have just come. The practical aspects, the case studies, etc., will only come up once they really sort of implement it. So talking about significant economic presence, again, let's start from the base. We had section 9 talking about income deemed to accrue or rise in India. Section 9 said that income is deemed to accrue or rise in India in the hands of an SSC who is located outside India if he has a business connection in India. So a non-resident or an SSC located outside India, income in his hands will be subject to tax if he has a business connection in India. Now, what was business connection? Explanation 2 said that business connection is cases few cases where you habitually conclude contracts, you enter into agreements, you procure the goods and services, etc. for the non-resident. Like if I take you back to that example of Samsung Japan, earlier I stated that Samsung Japan is the e-commerce participant in this case. Suppose it was Samsung Japan, would there still be income tax? Yes, there would be still income tax. 194O may not be applicable because Samsung Japan is not a resident e-commerce participant. But because of section 9, subsection 1, explanation 2, they've widened the scope of business connection, and therefore Samsung Japan, whatever is the income that it receives, it will be deemed to accrue or arise in India, and they will be liable to pay income tax at an appropriate rate. So coming back, explanation 2 is quite old. It is given under section 9, which expands the scope of business connection. Finance Act 2018 further expanded the term business connection and said that explanation 2A, talking about significant economic presence, explanation 2A says that two categories, if you fall within two categories, then you are called, then it's said to be, then there will be a deemed business connection. So explanation 2 said that there's a business connection. Explanation 2A is deemed business connection. In other words, significant economic presence. If you have a significant economic presence in India, then you are said to have a business connection. It's deemed that you have a business connection in India. So under significant economic presence, there are two categories which are given. On my left side, it is basically transactions in relation to provision of goods or services or property, including data download, software download by a non-resident in India. So non-resident providing services with respect to goods or services or property, including software download, data download in India, then if it exceeds a prescribed limit, then it is said to have a business connection in India. What were the limits? 2018 Finance Act did not prescribe that. The second category of transactions basically soliciting business activities or interaction with Indian users through digital means. So if you're soliciting business through interaction with Indian users, then you're deemed to have a business connection in India. Again, Finance Act 2018 did not tell how many users. If you exceed so and so number of users, only then will you be deemed to have a business connection. That was not clear with Finance Act 2018. So when it came in 2018, it was only in the books. It was only theory. It was impossible to apply practically, and that is why 2A, which was brought about by the Finance Act 2018, was repealed or replaced by Finance Act 2020. So significant economic presence, which was earlier given under explanation 2A, the scope has been widened by a new explanation 2A, which was inserted by Finance Act 2020. So the first category of service was basically transactions in relation to the provision of goods or services or property, a download of data or software. Now, earlier in Finance Act 2018, it was the term there was only non-resident in India. Now the scope has been widened because Finance Act 2020 says that download of data or software by a NR non-resident with any person in India. So it need not be with an Indian resident. It can be with any person situated in India, basically using the Indian IP address. And yes, CBDT, through a notification dated 3rd May 2021, finally brought about the limits for these two transactions. What it said is that a non-resident providing services in relation to goods or services or property, including download of data or software by a to any person in India, and if the aggregate of such payments received by the non-resident exceeds INR 2 crores, then the non-resident is said to have a business connection in India. Section 9, subsection 1 will be effective, and the non-resident will have to pay income tax because explanation 2A says that you will be deemed to have a business connection in India. The second category of services was soliciting business activities, interaction with Indian users through digital means. Well, in this case, digital means, the term digital means was deleted earlier, which means the scope has been widened basically. Earlier there was digital means, now it's been deleted. So it's basically soliciting of business activities, interaction with Indian users. It need not be digital means, it could be offline also, is what they're saying. So the scope has been widened. I would say that in the next Finance Act, in the upcoming Finance Act, they will probably clarify as to what could be the other means. Here they've only deleted the term digital means. But if you really take offline means, then the scope is really large. So there's some sort of clarity that's required, maybe through subsequent notifications or the next Finance Act, we can wait for the same. So digital means the term has been deleted. And yes, I was saying that earlier in Finance Act 2018, the number of users were not prescribed. In Finance Act 2020, it says that if you exceed the number of users, if it's more than 3 lakhs, then you would be deemed to have a business connection in India, and Section 9 will be applicable, deemed to accrue arise in India. So in other words, soliciting business activities or interaction with Indian users through any sort of means where the number of users involved exceeds 3 lakhs, then the non-resident is said to have a business connection in India, and Section 9 will get evoked. So in this case, we have finished digital economy and the challenges. equalization levy of 2%, of 6%, TDS provisions, GST provisions, the three aspects, that is TCS under section 52, OIDARS, and you had RCM provisions where the service recipient was the e-commerce provider or the service aggregator. And then now we looked into significant economic presence, which is nothing but, I would say, something to widen the scope of business connection. Because earlier there used to be loopholes, even in the explanation 2. Now explanation 2A was brought out, then again explanation 2A with Finance Act 2020 was brought in, and the limits have now come. You can see 2 lakhs and 2 crores and 3 lakhs. So earlier there was no limits. So now it is possible to practically implement this because we have the limits now, and any person not having a permanent establishment or a business connection in India, but if these limits are exceeding, if he's providing these services, then deemed to have a business connection in India and then subject to income tax. So this is very important while giving opinions, I would say, on tax matters, especially for payments made to non-residents from India. We basically look at section 9, section 5, and therefore now there's an importance, there's relevance for us to look at the new explanation 2A by the term significant economic presence inserted by Finance Act 2020, wherein 2 categories of services, if the limits exceed, then you will be deemed to have a business connection in India. Right. Equalization levy, just to summarize, I did talk about 6% and 2%. 6% is basically for advertising services, Facebook being the typical example. Ad revenue received by Facebook, Facebook liable to pay 2% EL. EL 2.0 brought out by the Finance Act 2020 was basically for the big giants like Amazon, Alibaba, etc., wherein gross consideration received from the provision of e-commerce supply of goods or services is subject to 6%, is subject to 2%. Of course, you have a limit to 1 crore there, and you have a limit to 1 lakh as far as your 6% EL is concerned. TDS provisions, majorly it is 194O, which was quite big, I would say, because it is relevant. What is the purpose of implementing 194O? Earlier, we really couldn't, the government couldn't track the e-commerce participants, right? So now they have got hold of the e-commerce operators and told them to deduct 194O so that now it'll be you can easily track the e-commerce participants. So TDS under 194O, wherein 1% was liable to be deducted by the e-commerce operator making the payment for the supply by the e-commerce participant. And then you had GST provisions, the 3 aspects, and significant economic presence. Now, what is now being discussed in today's scenario? Well, this is just around 2-3 days back. You had these 3 headlines being popped up in the news. US investigation into digital. They're not very happy with India's digital tax, to put it up in simple words. The United States Trade Representatives, or the UTSR, they have increased tariffs by around 25% on commodities imported into India. Why? Because India has imposed digital tax. So on one side, India is imposing this equalization levy of 2%, and US acting on the other side e-commerce giants, the likes of Amazon, are located in US, and therefore the UTSR, which is represented by these e-commerce giants, they're not very happy with digital tax implementation in India. What minimum tax? The G6 countries, that is the richest richest countries, I would say, they have met a couple of days back, and they have proposed something called global minimum tax, and 15% is what they have proposed. more details will come out probably by the mid of 2021. And it is to be in line with the OECD recommendations for BEPS action plan. Of course, it will not be relevant for India because India, we anyways have a higher tax. They said 15 tax. Their objective was to tax MNCs. We are taxing them at 40%. So we are anyway meeting the requirement. But the other countries, the G7 nations, the G7 nations will have. They're proposing to implement a global minimum tax, when they will collect 15% from MNCs who used to have their accounts in tax havens. The third said Amazon, Facebook lobby groups to urge digital tax in. They're not very happy with this because there's crores and crores of equalization levy that these guys will have to pay to the Indian government exchequer. Like I told you in the first few slides, 1,500 crores was the collection just after the introduction of equalization 2.0. Next year, it'll double because we are on Amazon every day. So these guys are not very happy. Of course, their income we are not taxing, but equalization levy, and more because they're not getting the credit of the levy that is being charged. Had they got the credit, that they can utilize with the US tax and pay a lesser amount, but they have to pay something called as EL in India, and they have to pay the US tax, whatever tax is applicable there. So this is, 3 cases that are applicable in today's scenario. I've come to the end of my presentation. I've not taken any questions. So if there's any questions or any doubts, then you can put in the chat box, or I can come to them.
In case of any questions, please post in the Q&A box so the speaker can take it up. Jomon sir? While we're waiting for the questions, if we could have a closing remark from you, sir. Jomon sir, can you hear me? While we're waiting for the Q&A, if some member has any questions, if we can have a closing remark from you. Jomon sir, can you hear me?
You have to mute. Extremely sorry, Diva. There was a bit of a communication issue. Extremely sorry.
No
Good evening to all of you, and Chairman Ranjit, Diva, other managing committee members, and the debutant this evening, our very dear Deepak, third generation in action. I had the great privilege of interacting with Korah sir and very closely interacting with George Korah sir and Deepak from his student days. So I was a little late to join, but then as I joined, I was looking at the presentations, very keenly listening to you. Well-researched presentation, great diction, exemplary delivery. Not surprised because it runs in your DNA. So I sent a message to George Korah sir, Deepak is going great guns. And so he replied saying that, that his father was more nervous because this being his maiden presentation at the branch. Only thing I would like to say is that they should not stop at the branch. this needs to be showcased on a much bigger platform on a canvas. Everything that you've covered right from the beginning, equalization levy, all those things, 194 income tax provisions, GST provisions, and concluded with the global scenario, what's going to emerge. And India is not insulated. India is so well connected, integrated with the global economies. Every other e-com operator is looking at India because of the young population, the internet connectivity penetration that we have. So I'm sure that I was just looking at glancing through the mix of the audience. We have a mix of juniors, middle-agers, and of course, younger members. For every one of us, I think this gave a completely new perspective, because most of the time we try to think that it's all easy, and rightly captioned digital tax, not just a click away. Full justice done, Deepak. So proud of you, and really nice to have you at the branch. And so sorry for that slight interruption in between, because I got a call and I thought we were still waiting for the Q&A and chat box to be completed. So extremely happy that you could join us and be more active at the branch and the firm. The exposure that you have at Korah and Korah and the network is really valuable for every one of us. So let's continue to interact, stay connected with the branch. And let me take this to the next level. At SARC, we should do something, because it is a class apart kind of a presentation. Thank you so much. And Ranjit, I think this was day 2. Yesterday we had Nandaji. I couldn't log in because at the same time I had another meeting. And tomorrow also we have. I hope you have made or probably Deepak could make that announcement. So this could continue. Third day. Tomorrow is day 3, right? The last day.
Day after, sir. 18th.
Day after. Anyway, fine. Good. So well-organized program. Thank you for making me part of this and allowing me a few minutes to do a roundup. Well-deserving applause to Deepak. All the very best to Deepak, and thanks MC team for making this event happen. Great. Thank you.
Thank you.
Thank you, Joman sir. And I was just looking at the chat box and the Q&A box. No questions have come up. So, Chairman, then shall we wind up for the day? So, thank you, Joman.
The explanations
That's
were
good,
so lucid.
Yes, the
So lucid
presentation
that
was very
not much of room for questions. Yeah.
The presentation was very
internet interruptions because it's raining heavily here.
No, when you're going digital, that is bound to happen. Deepak, when you go digital, if you talk about accounting standards, it will never happen. But then you go digital, the system will always come up with some technical side. No, that is okay. By the time I think I joined a little late. Initially, there was a problem. Even Gst Korah sir was saying that now that time it was good going. Great. All the MC members are, I think, full attendance. MC.
Always so, sir.
Yeah, always. So that's the way it should be. Proud to be part of the MC. Babu sir is not there today.
Babu sir is not there.
Fine. Go ahead, Deepak. Back to you.
Thank you, sir. Thank you, Deepak, for that wonderful, detailed and simple presentation. You know, this is one topic which can be made sounding quite complicated, but you made it sound very, very simple and easy for us. Yes, we did face some technical snags in between, voice was breaking, all that, but next time you do a presentation, we'll see how that can be, managed. This is the flip side of going digital, but that's okay. We'll definitely manage. And you can just share your presentation with us. Actually, in fact, while the presentation was going on, a couple of people messaged me asking me whether this presentation will be uploaded in our website as well as in YouTube. Yes, this presentation will be featured in the YouTube and in our site once we get that presentation from our speaker. So please do share the presentation. And as Joman sir said, yes, we all hope and wish that you will scale greater heights. And a couple of people also asked me whether it's George Korah's son. So, yes, maybe I should have said that in the India.
Making a little informal towards them. Please go ahead.
Sir. So thank you so much, Deepak. You did the first study circle with us, and we were able to get you again for the first time to do a CP seminar. So wish you all the very best for the future, and thank you so much for joining us. And thank you so much, Joman sir, for thank you for joining in the last moment and doing the closing remarks. It's always wonderful to work with you. We keep learning from you and Babu sir, both of you. Thank you so much for joining us today. As Jomun sir has already given a thumbs up, heads up to all of you, the participants, we are having one more seminar, the last of the series, on the 18th of this month at 3 p.m. again to 6 p.m. by Mohan R. Lavi. It's on auditing standards. We request all participants to kindly join us on that day also. Mails will be sent to you. And on 21st morning, 11:30 to 1:30, jointly with the Income Tax Department, we are celebrating the International Yoga Day. So please do join us for both days. And it was wonderful holding the seminar webinars for you. You've been great and motivating to all of us, like every day. Every day I keep saying the same thing. Thank you once again for joining us in huge numbers. And thank you to the branch staff for being such support to us. From everyone in the managing committee and on my personal behalf, this is Ernakulam Branch Managing Committee signing off. Thank you so much.
Post-COVID, I think we should give Deepak